Hey, Chinchilla Pickers. This is Brandon Beaver, one of the hosts of the show. I hope you know that. I just wanted to say thank you very much for sticking with us through all of our audio problems. This is my first time editing and recording a podcast. It's Dave's as well. And we know we've had audio issues in the past, and we're trying to work through them. And I think we're getting there. However, I have to warn you, as far as this episode goes, okay, I had some computer problems over the weekend. I wound up having to delete everything, clear everything off my computer, and reinstall the operating system, and it was a mess. And in that mess, I forgot to switch my input back to my mic. So on this episode, you're hearing me talk on accident into the built-in mic on my computer, which is not very good. The good news here is that I figured out how to make me and Dave both sound the same as far as volume goes. So we're both at the same loudness. So I conquered that. But the audio quality is rough here. Also, if you're listening to this and maybe you have headphones on or something, if you're listening to this in a situation where you're listening to show after show after show, and this is, this episode is coming after the one that you listened to before, you need to turn the volume down a little bit, because the volume is going to increase on this show and probably every show after this, because we're trying to normalize it so you don't have to turn your car speakers all the way up to hear us both. And then you don't have to turn it up to hear Dave and then down to hear me. So the audio, we're both equal loudness here, but there's some background noise and some feedback that, I'm not too particularly happy with, but these are the growing pains of a new podcast. And I really appreciate you guys sticking with us. This is a really good episode here. There's a lot of good information, so I hope you enjoy it.
Hello, everybody. Welcome to the Chinchilla Picking podcast, where we always hope to be entertaining, educational, and uplifting, because we want everyone to make money. It is July the 1st, 2021. Brandon Beaver, how are you doing today, man?
I'm good. How about you?
I'm actually doing well. I realized recently that I am not the best gardener, and I need to water my plants more often. But lesson learned, and I'm hoping my plants will survive. So we'll go from there.
You're gonna kill them.
I am not gonna. I'm really gonna try hard on this. Because I'm growing vegetables for the first time, and I don't want them to die. I got habaneros going and cherry tomatoes.
Ooh, habaneros. Spicy.
I know, right? I love habaneros, man. Throw them in like an omelet or your chili or, your pasta, what have you. Throw some habaneros in anything, man.
My spider bite's getting better. It's a lot smaller now.
It does look better.
Antibiotics
are smaller than the size of the Band-Aid.
Antibiotics are still kicking my ass. Like, I am so tired right now. I'm on 2 different antibiotics, and it make me very, very tired. But I'm okay. We'll push through it. Be all right.
We will push through it, man. We will push through it. You were always sick of something, man. Seriously, how did you get through the pandemic?
Something always happens to me. I was sick twice during the pandemic. I'm pretty certain it was COVID, but I'm not 100%. I did do the antibody test, but it came back negative. But my doctor said that that's not always trustworthy. So,
gotcha. All right. Well, let's get into the show. We have finished the first half of the year. It is now into the second half of the year. Brandon and I have been doing this show now for just a few months. We're hoping to continue again for a full another year. Our viewer base continues to grow. Please follow us on Instagram. That's where you're going to get the best tips and tricks from Brandon and I. We are in the process of setting up other accounts. And Brandon does appear on multiple podcasts, so he is out there spreading his voice to the world. We appreciate that. Rules. Everybody needs to hear the rules. We go over it every single week. Brandon and I meet up 5 to 10 minutes before the show. We tell each other what we're going to talk about, but we do not discuss it. We leave that live discussion for here on the show so you guys can hear the live interaction between us. Brandon Beaver and I talked. I'm good to go first. Yay! I don't know if we talked. Brandon jumped in. You jumped in real quick, and I was like, "No, Dave, you go first. You go first today." All right. So, Brandon, I want to talk about oil for a second because I know this isn't on your topic list. I know we had a couple topics that were aligned, and we'll get into those and have more deeper discussion because those will probably take up the biggest chunks. I want to spend the first just a few minutes here on oil because I keep bringing it up every single week, right? And everybody's like, why does Dave keep talking about oil? Because I keep seeing things that don't make sense. So I talked about a couple weeks ago about how the oil rigs were at 400, around 500 rig count, right? And before the pandemic hit, there were a little over 700 rig counts active in the United States. And they shut them down. They went down as low as 200. And that was the active rig counts in there. But they didn't. They just put a cap on those rigs. They weren't pumping anything out of it. They weren't doing anything really to dismantle those rigs. They were just leaving them not working because they're waiting for the pandemic to get over with so that they can open back up. And so I was wondering why oil prices would keep going higher, but yet oil companies were not moving in tandem, and wondering what was going on with this. And I've been listening to analysts talk, and they're talking about how the oil companies such as Conagra and Exxon and that those type of oil companies keep trying to pay out this high dividend. They're saying that they don't have the cash flow to pay out the high dividend because they don't have the reserves once they empty the rigs they have. But when I was looking at the rig counts, I'm looking at those compared to what they had last year, and the fact that they still have hundreds that they weren't using. What was going on, right? So I took a little dig deeper and tried to see if I could figure this thing out. So back in May, they actually were, according to this website I got the U.S. rig count from. I got to quote it correctly. I don't have it on me now. I should have wrote it down. I apologize. But the actual rig count back in May was 750. And the rig count in June was 470. So they were at pre-pandemic levels in May, but it wasn't making the news. It made the news in June when they dropped back down. Why did they drop back down is my next question. And then the fact that OPEC and OPEC Plus came out today and is saying, we're not going to pump out any more oil. We want to keep oil right where it's at as far as what we're producing and what we're giving out to the world, because they want to keep the price going higher. Because the OPEC is from countries that depend on oil being at a set level to pay for all their country's expenses. So, I mean, Brandon, when I look into this, conspiracy theories abound in my head here about what's going on. Is there some kind of agreement between OPEC and these U.S. oil companies, or what's going on? Why are the U.S. companies closing down rigs in June when they should be opening more up because the pandemic's over with and things are opening up? Why are they doing that? And then OPEC's not pumping out any more oil either.
Well, there's still a small bit of uncertainty as to whether or not this pandemic is actually over. You got the Delta variant. I think that was in Australia, right? Which is more contagious, and I think they just want to be sure that it's over. That's what I would guess. Keep the rig count low. Don't burn through so much cash on that stuff, just in case we wind up having a portion of the world shut down again. Now, with that being said, a lot of that cash flow they're spending on dividends will probably come back in the next quarter. I bet we'll see a rise in cash flow for oil companies in the next quarter. I think this is the American summer. This is the American Renaissance. People are going back out and they're traveling again, spending a lot of money on gasoline, on plane tickets, and so forth. and they'll get a lot of that money back. I think the dividends, as long as there's no oil, or I'm sorry, as long as there's no COVID crash again, the dividends will probably be fine for the most part.
The dividends should be fine for the most part. I'm not going to buy any oil companies right now at these levels because I don't know what they've agreed to and not what they haven't agreed to. Oil companies reach deals with airlines and they reach deals with other trucking companies as we'll sell you oil at this price per barrel or this price per gallon and so on and so forth, right? So they hedge out their deals for the future. Are they signing new contracts now that the oil prices are higher? Are we going to see that influx of new cash? Is that what Exxon, Conagra, and BP are hoping for? I don't know. And because there's just too many unanswerable questions as to why Exxon's not at 90, 80, 90 bucks a share right now as oil keeps skyrocketing up. I mean, that's just the chart for the price of oil per barrel is a investor's dream. It's just straight from left bottom corner to top right corner. Investor's dream. It just keeps going up.
It's crazy. Like they get away with in the oil industry price fixing and things like that no other industry could ever get away with. A lot other executives would be put in prison for the stuff that the oil companies are allowed to do.
Right? Exactly. And I just don't know what's going on in there. I'm not a buyer of the oil companies. Now, I would look at stuff like RIG, Transocean, or Schlumberger, SLB.
I like them.
Look at those two companies because oil's going to continue going higher. OPEC refuses to push out more oil. The U.S. companies are keeping their rig count low. There's not a lot of supply. And that means oil price is going to go up because demand is going higher. And you know what really irritated me today? An analyst on CNBC said that, the U.S. consumers, who cares if we had $5 a gallon gas? It doesn't matter. We could just pay it. Everybody's driving Teslas nowadays anyways. How out of touch with the American public do you have to be to say something like that on TV and think that that's okay?
This person's clearly never been to Ohio.
Well, not even that, Brandon. What type of people don't have Teslas because you have to plug them in? What type of people? People who live in apartments. People who live in condominiums, maybe even. Those people don't have plugins for their Teslas, so they're not going to buy them. Who lives in apartments? Are they the upper middle class? Are they the higher class, the rich?
I mean,
are they? No, they're the lower class.
Cities,
come on. Now, those are the people who typically live in apartments. You're just slighting them on TV and thinking it's okay.
Right.
No, $5 a gallon gas hurts the lower working class. These are the people working the jobs.
Yeah. Even if they don't have cars, even if they are in a city, and even if they're walking, it's still going to kill their grocery prices.
Yes, exactly. And this, and they're just laughing about it on CNBC like it's not a big deal that we're going to have $5 a gallon gas.
Yeah, I don't even want to say how much my groceries cost the last time. I told you what my grocery trip cost the last time.
Yeah.
Mind-boggling.
Now, people in California, Brandon, right now are going $5 a gallon gas since it's going down in price, and that's just because they live in a different area than we do in Ohio. Yeah. So in California, we'll be talking probably $7 a gallon gas. It's outrageous the cost here, and so who's making all the money? Because obviously the oil companies, their stock's not moving. They're not reporting massive, huge profits yet that we've seen, and that's why I'm saying RAG and SLB. Those are the two ones I'm looking at to possibly buy going forward. I mean, Schlumberger just continues to grow, and they continue to jump up. I love them. Ever since I was calling oil option plays last year, I've loved them since then. Schlumberger, yes, say it correctly. It's not Schlumberger, it's Schlumberger.
Schlumberger?
Yes. All right. That was my rant for today. I wanted to get my rant out of the system. Here's another one I wanted to concede to Mr. Brandon Beaver here. You had sold me on Didi, sir. Didi Global. You have mentioned in the past 2 weeks. I want to say, all right, man. All right, I'm in. I will invest some in Didi Global. For those of you who don't know Didi Global, guys, this
what about
is
Baidu? Don't forget about Baidu.
We're not going to go there yet. I'll let you handle that. I'm talking about Didi. Right now, it's my turn, remember?
Mm-hmm.
So, Didi Global. If you don't know Didi, guys, it is a huge, massive company. It is massive in Asia. It is like Uber, but now Didi Global has autonomous vehicles, taxis. So no people driving. They don't have the overhead cost of that. They just have these taxis out there roaming around, ready to pick up. Yes, Baidu has it as well. I love the Baidu commercial there. We posted a link on our Instagram. If you follow us on Instagram, you could have followed that link and seen that Baidu commercial. It was really pretty cool. I was really impressed. But Didi is one, I believe, that is already set up and ready to rock with this. I think they're going to lead the way. I think they are leading the way. I don't understand why the U.S. companies are so far behind them.
I don't know.
Why is Uber behind them?
I don't know. I'll be honest with you. People don't realize how far behind Asia in general we have been for the past decade. All right. I was in South Korea back in around 2008. I spent 3 months there. And I just want to say their floors are heated. Their wooden floors are heated, which is freaking awesome, okay? And then not only that, but my mind was blown because, we have Hulu TV now and the streaming TV where you could scroll through the channels, right? But this was 2008 in South Korea, and you were able to do that there already. And my mind was blown that I could just pull up like any program that I wanted to watch at any point in time. I didn't have to DVR it. There was no DVR space taken up because it was all on the cloud. And that was already there. They are far and above ahead of us in a lot of ways. We are ahead of them in other ways, but in I'll tell you what, as far as what we're talking about right now, which is autonomous vehicle taxis, they're ahead of us. Now, would you say it's because of U.S. regulation and bureaucracy is why we don't have it here? I don't know. I haven't dug too far. I actually have been asking myself this question in the last couple of days. The same thing after I saw that commercial that Baidu did, and like, wow, that's crazy. It might be regulation. I know from what I've heard, there's less traffic laws in China than in here. I don't know if that's true or not. It's just what I heard through the grapevine. So, and there's potentially less transportation laws as well and regulations. Same thing. I actually did no research on that myself. I just heard it from somebody who had been to China. That would be where my guess is, the laws and regulations, and maybe even money being eaten up by pensions and all of that stuff. But I really don't know for sure, to be honest with you. There's something that stops us from being as innovative as those countries. There has to be. It's not that we're not intelligent enough. I mean, maybe it is, but I don't think.
And that's the answer right there. No. You mentioned pensions. It has more to do with the automotive markets, as to why you could buy a foreign car cheaper than an American car, just because of the cost of that. It's an effect you bang it into the car. But
and that's resources.
The autonomous vehicles, autonomous vehicles, taxis. Google has enough money. They have enough innovation. Yeah. Why aren't they doing it? Why is Apple not doing it?
I don't know.
We have companies here that have enough money, that are profitable, that have money just sitting out there that can make this happen quickly. Why are they not doing it?
You remember years ago when Huawei, I think I'm saying the name right, came out with a phone that looked just like Apple's, and there was this whole thing about like how they were copying the iPhone. It literally looked just like an iPhone. You remember that? And China was copying our tech.
Yep.
We're reversing those roles right now, I feel like. We're now on the other end of this. Like, they don't need to copy us anymore.
No, they're leading the way in a lot of areas, and this is definitely one of them. And it makes me want to be a buyer of Didi Global. I'm sold. As far as Baidu goes, I don't know. I've owned Baidu. I've traded it in the past. I haven't owned it as an investment, but I've traded Baidu before.
They do have
traded it.
They've already got those robo-taxis set up in 3 cities, so they are already running them. Baidu is. Didi is as well. So it's just ramping up.
Nice. What happens if they run out of juice in the middle of a trip?
I have no clue. I don't know.
I'm sure they have safeguards that would never happen.
Yeah. Maybe gas backup, maybe? I don't know. The Apollo technology for Baidu is really cool.
The thing is, as Americans, we won't know for another 10 years.
I know. They'll
have robo taxis taking their whole public everywhere. Car accidents will drop by 30%, but we will still not have it here.
I remember
because I believe in bureaucracy and regulations.
It was just like here a few years ago, everybody was so excited and so their minds were blown by the fact that if you started to veer to the right or to the left and go out of your lane, your car could self-correct. Hyundais were doing that in 2008.
Right? Exactly. I don't know, man. I don't know.
We need to step up our game.
We do. Come on, America. Let's get it done. All
get her done.
America. It's July the weekend. Let's get it done. Come on.
Are you blowing stuff up this weekend? I'm blowing stuff up this weekend. Or at least watching.
I'm not blowing stuff up, no.
I'm going to watch stuff get blown up at least.
Yeah. I'll probably cook a burger or a hot dog or something. But I will not be blowing stuff up. Nope. Sorry. I'll watch. Yeah, I'll definitely go somewhere and watch. Maybe hang out with some friends or something. Find somebody to hang out with. Who knows? We'll see.
Drink some Pabst Blue. It's not 4th of July without blowing stuff up and the Pabst Blue.
I just want to say I apologize for Brandon Beaver's foul language.
I'll cut it out. I'll edit it. I just create more problems for myself.
Yes, you do. Well, talking about problems for the self, guys, let's move into our next topic. This is one that we share, so we'll transition after this one over to you, Brandon. Is Robinhood. Brandon, you have the stats. You want to go ahead and take a minute and read off those stats for us?
Sure. So Robinhood today released their prospectus for their IPO. And here's a few things out of it. CNBC reported that Robinhood was profitable last year, generating a net income of $7.45 million on revenue of $959 million in 2020 versus a loss of $107 million in 2019. However, and I feel like with Robinhood, there's always a but. There's always a good, and then there's always a bad that comes right after it. The brokerage firm, they lost $1.4 billion in the first quarter of this year. And that was tied to the whole GameStop and AMC trading drama. The other but for this that I find rather alarming, if you look at their revenue, 38% of their revenue comes from options. 38%. Options is their leading driver of revenue. Look at the customer base of Robinhood, okay? And the drive, this is a millennial trading app. Most of these people came in to trading last year. They are not experienced. They should not be trading options, especially complicated strategies. And I think it is very easy, way too easy, to be approved for the higher level of options trading. That to me is worrisome. Options trading accounts account for 38%, so clearly in the lead there. Equities revenue is 25%, and crypto is 17%. So that's the numbers on that.
Gotcha. So if you're 18 or older in the United States, you're an adult. And as an American, we should have liberty and freedom to do what we want with our money for the most part. If they want to blow their money on complicated option strategies because they're uneducated, they think they're going to make $1 million in 1 month with their $1,000 they got in there. I'm sorry to say this. I mean, that's their right. If the company allows it, if the company allows them to do it, that's their right to do it. If they lose all $1,000, then maybe they'll learn their lesson from it and they'll take it from there and they'll become smarter and better and not make that mistake ever again.
But what happens to that 38% of revenue when a large portion of those people go broke? And then,
well, I mean,
sentiment.
If you look online, Brandon, if you follow Instagram or TikTok or any of these other things, none of these people are going broke. They're all millionaires right now driving Lamborghinis everywhere. Come on now. That's what they post all over. Every single one of them is making $10,000 a day.
Right.
That's what they're all posting.
No, that's because they post when they're lucky, and then once they lose it, then you don't hear from them again.
Exactly. Anyways, no, yes, Robinhood. So Robinhood here, the IPO's coming out. Is it a good buy? Is it not a good buy? I'm with you, man. They're barely making any money off of this, and they made it all with this influx of investors that joined them in the past year due to the pandemic, sitting at home, got their stimulus checks, wanted to go ahead and play the lotto with it and see if they can make any money. Everybody, when I tell people, man, do your 5% a week, Brandon, the number one most thing is like, that what you make in that first year, I can make just pulling in a part-time job. And I'm like, yes, you could. Yes, you could. That first year of taking $1,000 and doing 5% a week, and you would turn it into $8,000. That's not a lot of money. But I'm like, the point of the program of 5% a week, Brandon, is the consistency over time. Because it's the second and third and fourth years is where you just explode, and people don't have the patience. They want it now. I want my Lamborghini now.
Which is why they get 38% options. That's why.
Yeah. It's like, hey, I can make 80% on this option in 1 week. Why would I waste with your 5%? And I look at them and say, yes, you could, but chances are probably not. And you're not going to continue to do that week in, week out, right. Week in, week out consistently. The odds are, the statistics are out there that prove this time and time again, that the majority of people lose money when they try trading on their own. That's the true statistic. It hasn't changed.
We talked about this too before. The fact of the matter is, during the pandemic and going out of the pandemic, trading stocks was really easy, and so was trading options as long as you were selective. I mean, it was a no-brainer to buy calls on Amazon. That was a no-brainer.
Dude, it was a no-brainer. You could put your money in anything, and you were going to make money last year because everything was down. Everything across the board. You could have thrown your money at a dartboard and hit a stock, and you would have made money.
Yeah. As long as you gave yourself enough time, you would have been good. But it's not going to be that easy from here on out. I think it's going to get a little bit harder.
And since we know that, you and I know this because we've been trading for a number of years, and we've seen this, and we know that, okay, it's going to be hard now. You guys that just can't get out there and make your fortunes off just any old stock and claim you're the best stock trader in the world, is Robinhood a buy? Are people going to stick with Robinhood, or are they going to drop it?
For me,
and are they going to continue with options?
They haven't priced the IPO yet, so I have to wait and see the price. I am leaning 85% no, but there's a 15% of me that says if it's cheap enough on the IPO, I just doubt that it will be. I really doubt it will be.
I think it's going up right away because all the people in Robinhood are going to buy it.
Yeah, well, they're
these people who started trading last year and their first year trading, they're going to say it's 8 to the moon. That's what they're going to be saying.
And 20% of the IPO shares will be offered to Robinhood customers. So there's going to be a lot of people participating in IPOs, probably for the first time, which is also more risky than what people should be doing. IPOs are more risky than the regular stock market.
They could sell right away. And I'll take the profit,
Yeah.
There's just too much unknown, and guys, when there's too much unknown, I'm not going to jump in there. I don't want to go into something that I don't know.
Yeah.
There's too many variable factors that are questioning whether or not this is a good buy or not. And overall, like what Brandon said, I would wait to see what the IPO price is based on what they released as their revenue and top line and bottom line numbers are.
Yeah, I mean, you can know the company, but you have to know how much too.
Yeah.
Right. Like. Yeah. That's just everyday stock picking. Like, it's great if you want to buy Apple, but it's not so great if you buy it at, its all-time high. So.
Well, what's its all-time high? What it was at, last week or something?
I don't know.
So, that was a joke because Apple always keeps embarrassing. But anyways, Robinhood released a statement saying it cannot ensure an investor meme mania won't hit again. So something like what happened earlier and people lost some money in Robinhood not being able to handle all the accounts and the flow. They're saying they can't stop it from happening again. Is this going to stop traders on Robinhood from buying it? My answer is no. Why? Because AMC released a statement, and I keep quoting this statement on this program. Third week in a row, I'm going to quote the statement again. Do not buy our stock. What are people doing? They're buying the stock. It doesn't make a difference in their mind.
I have never heard a company come out and say, please don't buy our stock. Oh, man.
And people are still
world
buying
we live in.
I was scrolling through stock tweets about AMC, and they're like, to the moon, we're going to 100. I'm like, the company literally said on TV, do not buy our stock.
I know. That's crazy. You know what the thing is? The Robinhood CEO called it a black swan event, and then after that, how many more black swan events did we have? There were like at least 3 more black swan events. And then,
and now they're saying they can't say that it won't happen again.
This is my other red flag. Right when it was going on, he came out and publicly said, there's no liquidity problem. And then, during his testimony, when he was under oath to Congress, there was a liquidity problem.
Yeah, he's...
Then you could go through this
prospectus. He can get away with lying on TV, and then no one will ever figure it out.
Interesting, because you can't do that as the CEO of a publicly traded company. So he's going to have to learn fast.
He's going to have to learn very fast. Very, very fast. Elon Musk gets in trouble all the time for his tweets.
I know. He burned me on the 420. I had puts on Tesla, and he burned me with a 420 comment. And it wasn't even true.
What do you got next, Brandon? I know you had a couple
we'll talk
things.
about like the Robinhood thing here, because just a couple of days ago, Robinhood, this is from Futurism.com, an article from there. Robinhood agreed to pay a fine of nearly $70 million to the Financial Industry Regulatory Authority, FINRA, because Robinhood, and this is from Futurism, this is what they're saying, they say because Robinhood is really, really terrible at its job. The financial penalty was ordered by FINRA due to Robinhood's systematic supervisory failures and significant harm suffered by millions of customers during the GameStop and AMC mania. This was the outages, not people losing money because their app wasn't working, or even the cost of not being able to trade, not being able to buy anything. And not only that, not only the whole mania thing, but they are being accused of giving out false or misleading information. And this is the misleading part. Okay, so FINRA's investigation found the platform gave out misleading information, including information about customers' balances, whether customers could make certain trades, how much buying power they had, or how much of a risk of loss they faced when completing certain transactions. And then you had the headlines, the unfortunate situation where a young man named Alex Kearns killed himself because he believed that he had a negative balance of $720,000.
Does this change how Robinhood operates one bit?
No, because far,
maybe they change their privacy policy. Maybe they change their terms and conditions. Maybe they change something with their site. In order to use the site, you have to agree to our updated terms and conditions.
They've added some customer features where you can actually talk to somebody a little bit quicker now. They've added some educational things onto their
Here's
app.
my question. I want to interrupt you here real quick. How many accounts do they say on their list and on their report? I know it listed it on there. How many accounts do they say they have in Robinhood? They listed it today on the report, right?
I believe I actually have.
Because that's going to have a big impact.
Monthly active users. What I'm going to say right now. Monthly active users total about 17.7 million.
No, here it is. 18 million accounts, right?
Yeah, well, close.
So they have 18 million people who have a Robinhood account. They have a staff of 2,100. They cannot handle your customer calls. They cannot handle your customer emails. They have a staff of 2,100 people to handle 18 million accounts. They are understaffed. They are barely making a profit. They are not really. Their top line number needs to be in the billions, not billion. Yeah. In order to pay for everything they're at. They're too low of a profit margin, so that means they can very easily slip back the other way into a negative.
You know what, for me, the most important feature that they removed from this app, because it used to piss me off, was the confetti feature. Because I never paid attention to it when I made money, which is thankfully I've gotten to the point now where I make money on most of the trades. But I would really pay attention to it when I would sell for a loss, because it's like it's taunting me.
Now, how does that make you feel that now you're making money on most of or almost all of your trades versus where you were a couple years back? It's
a huge accomplishment. I think it's so great. I play with my charts all the time, and I like to go back in time and scroll with it and see where I was, a year and a half ago, 2 years ago, 3 years ago, and then move it up and watch my money go. That's fun. I still think I'm going to transfer my account over to Fidelity. I think I'm going to leave Robinhood.
Well, here's my question. Interactive Brokers allows you to pay a fee for trades, right?
Uh-huh.
And instead of sending your trade out to another company to handle your actual execution of your trade, they will put your trade in with the institutional trades and transactions, so you get a better price. Does that make that much of a difference that you're willing to pay per trade for that?
It depends on how much you're paying. How much is the charge? The fee for it. I actually have accounts with Robinhood. I've got one with TD Ameritrade, and I've got one with E-Trade, and I've got one with Fidelity, and I have nothing in the Fidelity account right now. But
you say, you know what? That is funny, because all four of those are the exact same ones I have accounts in.
That's awesome. The research, for TD Ameritrade, Thinkorswim is just priceless to me. The Thinkorswim app, I use it on my mobile phone. It's literally, this is where I chart, is Thinkorswim on my phone. I can't do it at my computer most of the time because I'm at work. So I think the best mobile application for charting is Thinkorswim. The best research is Fidelity. And then...
Oh, yeah, hands down. Fidelity's got research out the window.
And then if you're going to trade options, then the best is E-Trade.
There you go.
Power E-Trade. The Power E-Trade app.
Yep. I like this. This turned into a good segment about brokerage apps.
Yeah.
Who knew? Who knew this is where we were going tonight?
We're full of surprises.
I am not a buyer of Robinhood. I'm ready to move on.
If it IPO'd at $5,
No.
It's not going to.
But my answer is still no at this point. They can go negative so quick. Their user base, most of them don't have much money in there. They could lose their money and say, well, stock trading doesn't work and be done. So, no.
Yeah. It's kind of scary that they can lose money just like that, and how much money they control, how many accounts they have.
Yep.
All right, so moving on here, we talk a lot about company fundamentals, and I wanted to add in, we've talked about valuations before, but we've done the sort of the basic stuff like the price to earnings, the quick ratio, debt to equity, all that stuff we've talked about. But we'll go into a little bit about value. One of the tools that I think is necessary and really good to use is called Tobin's Q. It's a ratio, okay? And basically what this is, it's the market cap of the company divided by the cost of replacing assets. So you take up all the assets that a company has, the cost of what it would cost to replace all the assets, and then the other side of the equation is the market cap. Market cap divided by cost of replacing assets. You can simplify this, okay? And I'm in favor. I always am in favor of simplifying. You don't actually have to add up all of the costs of the assets and all that. You just do the equity market value, which is the market cap, and you divide that by the equity book value. And you get Tobin's Q. And a low Q ratio between 0 and 1. This means that the cost to replace a firm's asset is greater than the value of its stock. That implies that the stock is undervalued. Conversely, a high Q, greater than 1. This is actually off Investopedia. I'm reading right here because they're good at explaining this stuff. But a high Q, greater than 1, implies that a firm's stock is more expensive than the replacement stock of its cost. And that implies that a stock is overvalued. So this is often used for the total market. So they'll take the S&P 500 and they'll run that equation, and a lot of people say less than 1, the market's undervalued, over 1, it's overvalued. Some economists actually use 0.7 because 0.7 is the median of all the values going back into the 1950s. And I always say, you don't really know where you're going. You can't predict everything. You don't have a crystal ball, but you should always know where we're at. So this is calculated quarterly for the S&P 500. And for the first quarter that ended in March of this year, the S&P 500 had a 1.723 Q ratio, which is very high. You can actually head over to ycharts.com. Sign up for a free trial with ycharts. I'm a fan of them too, okay? But go to ycharts.com. You can actually pull up the Q ratio for the S&P 500, and you'll see that the 1.7s is about as high as it usually goes. So being at 1.723, that's pretty high. It looks like we're due for a correction. It's a tool that could be used. It could be wrong. Everything. So you want to take it into comparison with everything else you're seeing in the market and judge it for yourself. But that is our high valuation.
Hey, every tool in your toolbox helps you make the right decisions. If you do your research, use these tools that Brandon gives you guys every single week. He tries to give you a tip, a trick, a tool, something he uses. It is great advice. You know, I like this one. I really do. Because I like the way it's broken down and how they divide that there. So, yeah, I would definitely use this. Now, as far as the S&P, you know, I think we're overbought right now anyway, but that's just due to inflation.
Now, if you're using
and QE.
If you're using this for a growth company, say like Twilio or even Amazon, you're never going to get a Q ratio below 1 unless we're in the midst of a financial deep recession. So it's good if you're looking at the growth stocks, you could still use this equation. But you want to go back and look at the history of the stock and where its numbers usually are. And if you're at the high end, you probably wait. You don't buy it yet. If you're at the low end, say for example, Amazon, I don't know what the numbers are on this. I don't have them in front of me, but if it usually trades at a Q ratio of around 3 and you're at like a 2.2, that's probably okay.
Right, and here's my thing too, and this is a joke from earlier about Apple, man. Just because something's at an all-time high doesn't mean it's not going higher, though, Brendan.
That's true. All-time highs generally, actually, it's a bullish indicator. So,
yeah.
But I think that's where, you valuing a company, like you set the price for what you want to sell it at, and hopefully you're right, and if you do it really well, then you will be. And, if something's at a all-time high, and it's trading at 200, but you think it should go to 230, then by all means, hold it. It's fine. As long as you've done your due diligence and, I mean, a lot of people use a lot of nonsense, a lot of crazy math to try to value a company. I heard a quote the other day from this is an audiobook I was listening to. I forget which one it was. But the guy said that the more math you see somebody using, the less experience they have. Because they're trying to make up for their lack of experience, right? Because they're not...
See, hold up. This explains all the time why it's gotten to the point I ran into so many traders that are just pulling out math and this resource and this analyze and this chart and everything. And then I'm over here like, hey, we ought to go ahead and buy Riot right now.
Yeah.
And they're like, why you do that? Well, I got a hunch.
Yeah, it should never be. It should never be more.
And it's like, I could explain that like in the back of my head. All right, look, I've been trading stocks now for over 15 years. Here's what I've seen. This is what's happening this is what's going on in the economy. Here's the macro events. Here's how it would affect Riot. Blah, blah, blah. And this is why I said I got a hunch.
Yeah, and I'm not saying don't use math. I use it all the time. But, it should never be more than 8th grade algebra. I think a lot of people try to dig too deep, and the reason is they're not confident enough in themselves to make the trade and to go with their gut. And that is.
Well, here's another thing too, Brandon. If you go on StockTwits, go on AMC, right? They were down and then they went back up, right? So when they were going down, you had all these people posting all these charts on StockTwits saying, "Oh, here's why it went down because of this chart here," and they're analyzing here, and like it's going to continue down. But then 5 hours later into the day, it went up because of here. Here's the bullish flag in this chart, and I'm like, guys, none of you really know what you're doing.
Have you seen
None of you really know what you're doing.
There's this hilarious YouTube video of this guy. I don't know if you've seen it or not, but he's being sarcastic and funny. But he's like, I went on my Robinhood and I saw this stock was going up, so I bought it, but then it went down. And then I thought it was going to go down more, so then I sold it, but then it started going back up. And I thought it might go up more again, so I bought it again, but then it went down. I feel like that's the reasoning of half the people on StockTwits.
Yes.
That, or you can watch them trade, and they've got all of this crazy chart information on their screen that has nothing to do with one another. There's no discernible trading strategy, and they're basically just they're reading tea leaves is what they're doing. Well, the HMA is going, and the HMA is fine to use, don't get me wrong, but you need to actually have a specific strategy so you know what you're looking for, right?
Exactly.
Right?
Exactly.
You don't throw a bunch of stuff on your screen and like have 50 things on there. You're just going to confuse yourself.
You will confuse yourself. That's why I stick to the sectors I trade in at each given time. Right now, my eyes been on oil and the financials, and that's why I've been trading. And every now and then I dip out, and I'll look at something else. But I stick to certain sectors, and I go throughout periods. What else you got, Brandon?
Well, Constellation Brands. I went to listen to their earnings call yesterday. And I was listening, and I was basically listening not because I thought I was going to buy the stock. I do like the company. I've always liked the company. I don't like the stock where it's at right now, price-wise. But
hey, Corona's the number one beer in the state of California.
That's a good beer. It's gluten-free, too. I don't know if you knew this or not.
Really?
I have one of my many ailments is that I have not an allergy to gluten, but an intolerance to gluten, so Corona's good stuff. They also have, Constellation Brands has an investment in Canopy Growth, which this came from their earnings call yesterday on Constellation. They said that Canopy Growth is on track for its first profitable year this year.
Really?
Yeah.
This year.
Mm-hmm.
That's interesting because I had a few friends throw me some marijuana stocks, cannabis stocks this week, and say, hey, these are looking to have some growth. When I was watching the market, the cannabis sector was down overall. And so I was kind of like wondering, what are they seeing that I'm not seeing? What's going on here? Something I'm looking forward to. I'll have more research on it for you guys next week.
Politics aside, I do think that you've got a better chance now for legalization across the country than you've had for a while.
Well, yeah, and it's just going to be that way going forward.
Yeah.
Eventually, they're going to do that, and then they're going to move into something else. I mean, in Portland, you can just have any drug you want.
Yeah. Now, they did, and this is the reason I was listening to
Oregon. It's the whole state of Oregon. Never mind. Yeah.
Mushrooms?
Personal use.
LSD?
You have a personal use of heroin. You have a personal use of LSD.
Now, see,
you have a personal use of mushrooms.
I'm okay with it.
You have a personal use of everything.
I mean, if they legalize heroin in Ohio, I'm not going to go out and try it. That's not going to happen for me. And I think most of the people that are going to try heroin are going to do it regardless if it's legal or not. I mean, if somebody is thinking they have it on their mind to do heroin, they probably don't care about the law. So, and then not only that,
anyway,
but when somebody wants to get help, instead of sending them to jail, then you send them to rehab. They don't go to jail now. They go to... Okay. Well, Constellation Brands. The whole reason why I was listening to the earnings call was that I wanted to hear if they said anything about inflation. And they did. Okay? They do think that their bullish momentum is going to continue throughout the rest of this year. They are happy with the way things are going. However, they said significant inflationary headwinds are going to last through the second half of this year, and that uncertainty regarding inflation is rising. Which is interesting because I actually saw an article the other day, I think it was on CNBC, that the inflation fear has peaked. I don't agree with that.
What?
That's what they said. The inflation fear has peaked. We're beyond it.
No, people stopped reporting on it, but it's still happening. Inflation is still happening. They're talking about $5 a gallon gas, and for people in California, $7 a gallon gas. And they're talking about that being a thing that the U.S. can just endure and take. I mean, inflation is happening and it's getting worse.
Yeah, you know what? The bailouts and all that, the COVID stimulus, it was fun when it happened, but people don't realize that you're either going to pay it back through taxes or you're going to pay it back through inflation. It's going to equal out in the end, right? You flood the money into the market, and then the money just devalues because there's more of it. So you're going to wind up paying higher prices. Eventually, it either evens out, or worse, you wind up paying more in the end.
Yep. Look at your grocery bill next grocery tip, guys. Look at the bill. Look at the bill. All right. 100% agree. Inflation is getting worse. We have not peaked.
Nope.
Anything else, Brandon? What do you got?
That is everything. That is all I have for this week.
What's your final thought?
I'm really tired, man. I can't wait for these antibiotics to be done for. I can't even think straight right now.
Well, since we're a stock and investment show, my final thought would be about stocks and investments. Oil guys, I'm watching RIG and SLB as possible candidates to buy. Right now, I am calling a buy on Didi Global. I think it's a good investment to have. It's a good swing trade. As far as an investment, it's great there as well. Do I think you're going to make a day trade off it tomorrow? Maybe. You might. You might make a 5% pop tomorrow, but most likely not. It's a swing trade. Didi Global, I like that one. Robinhood, I'm not buying. I'm not buying the IPO. Sorry. It's a no for me.
You know what? I'll give you a little bit of final thought here. We talked about Tobin's Q and the S&P 500 and everything. I also want people to keep an eye on the yield curve because it could be interesting what's going to happen with that. I'm very, interested, and I don't want to say shocked because we called bonds being dead a long time ago, and we're still under 1.5% on the 10-year, and I don't know what's going to happen with it. Watch for a yield curve inversion. I'm not saying it's going to happen. I'm just saying if it does, start taking some money out of the market.
There you go. You heard it here first, guys. This is the Chinchilla Picking Podcast. Follow us on Instagram. We hope we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.